Hello guys, in this video I'm going to show you my 15-minute scalping strategy or day trading strategy that I use on synthetic indices. Okay, and this strategy has to do with liquidity sweep of specific highs and lows of a specific time of day, and I look for reversal patterns or possible continuation patterns depending on how price books. Okay, so now let's look at the rules. You first of all have to mark highs and lows between 12 a.m. and then 8 a.m. On your chart. So if this is 12 a.m. where the new candle opened, between 12 and after the 8 o'clock candle closes, okay? So after we close on the 8 hour of the day, 8 o'clock, you go to your chart, you are going to mark your highest point that price has put in between 12 to 8, lowest point that price has put in between 12 to 8, and that will be your sell side and then your buy side liquidity. Okay, so point 2, you're going to wait for one side to be raided. So in this case, price raids the buy side liquidity. Now after the raid, we want to see immediate reaction or break of structure. So we have an immediate break of structure, and then we want to see a fair value gap being left behind, and that will be our entry point. If there is no fair value gap, there is no entry. Doesn't matter we've broken structure after liquidity grab. If you don't have a fair value gap here, don't think of any entry. You may have an order block, but the order block is only valid if there is a fair value gap before the order block. Is that okay? So yeah, you enter from the fair value gap that is formed or order block around the fair value gap, okay? If there is no fair value gap, there is no entry. Just note that. Your profit target 1:1, 1:2, or the opposing liquidity pools. Trust me, 1:1 has 99% accuracy. Okay, if you're going to target 1:1, you're going to hit profit target almost all the time, about 99% of the time. But you can target 1:2, or you can target some of these short-term lows or this sell side liquidity as well. Okay, but as I said, if you're not greedy and you're going to target 1:1, you're going to hit profit almost all the time. Now let's look for the bullish scenario. So highs and lows between 12 to 8, right? You mark highs and lows between 12 to 8. We wait for one side to be raided. Now we raided the low. We have an immediate market structure shift with what? A fair value gap. That's where we enter from. You can take profit at 1:1, 1:2, or this short-term highs or buy side liquidity. Okay. Now, sometimes we may take liquidity and price will continue to break in that direction. If you see that after liquidity grab and price is still breaking in that direction, don't look for reversal, rather look for continuation. Okay, so let's say after we broke that low, instead of price breaking up, it rather continues to break down. Once you see two continuous breakdown after liquidity grab, after liquidity grab, if you continue to see two break of structures in a row, don't look for reversal, rather take continuation from the fair value gap that has been created after the second break of the low. Okay, and that's this is what invalidates our reversal pattern. We only look for reversal if the liquidity is been taken and with immediate reaction and break of structure. But if price continues to move in that direction and continues to break structure twice in that direction, don't look for reversal, look for continuation from the fair value gap that is formed after the second break, after the liquidity grab. Okay, look for continuation. I think that one is better explained. I have a markup here. Right here. Okay, so we have 12 to 8. This is the lowest point, this is the highest point. Mark a wall. Okay, so you can see that we raided the high. We didn't get market structure shift, and we broke up twice. Once you see this, because you should know that the market is strong to the upside. Okay, and after the second break, the fair value gap that is formed here, that will be your entry point. Once again, 1:1 risk to reward, 1:2. Or you can simply target this high that has been formed. Okay, this high that has been formed. So if you see this, after liquidity grab and prices continue to break structure to the upside, don't just take continuation, don't look for reversal. So that's what this is, and that's what this explains. Okay, if price continue to form two continuous structures after liquidity grab, note that you are going to take continuation and not a reversal. Okay, now let's look at how we can turn our failure to success. Because sometimes you can have liquidity grab like this with aggressive market structure shift with a fair value gap. You try to buy and it breaks down one more time and you lose. When you lose, you don't have to be mad. You can turn this failure to a success. What it's telling you is that it's telling you that price is not going to reverse, but it's giving you a continuation pattern. So let's look at that here. Okay. So we have our highest points between 12 to 8 and our lowest point. We rated the low. We have aggressive market structure shift up here, fair value gap here. We take our buys and it stops us out and break down one more time. Okay. So first of all, we had our market structure shift. Fair value gap was here. We would have bought from here. Let's say 1:1 or to this high or to this area, wherever you want to take your profit. Stop loss below this low. And it took us out. You don't have to be mad. You can still turn this failure to a success. Because if this happens, it's giving you a continuation pattern. So look at what has happened. Continuation pattern to the downside. Liquidity grab up here. Breakout structure to the downside. So now this same area, the fair value gap you wanted to buy from, that will become an inversion. Inversion means support turning to resistance. So this was a bullish fair value gap we wanted to buy from after this market structure shift. It fails and we break down. Now you can sell from there when price returns to it. Also, this will be a breaker block here. There will be a breaker block here. And you can also sell from there. And that's how you can turn your failure to a success. Okay. So if the market presents with a failed reversal pattern, so this was a failed reversal pattern, it took liquidity to the downside, shifted market structure aggressively. We tried to buy, and it broke down to the it broke to the downside one more time. In this scenario, inversion fair value gap will break up block and look for continuation. Very simple. Okay. Now let's go to the chart. Look for live examples. Okay. I've been backtesting this on VIS 25 for a long time. So I'm going to use VIS 25 for us to backtest a little bit of how, and I'm going to go randomly so that just anywhere in price, just random. You can see I've been backtesting a lot, right? Let me just clean everything up. Okay, let me do this on a fresh chart. And then we backtest 3 to 4 examples. Okay, I'm going to 15 minutes. Okay, right there. So this is a 15 minutes chart. And mind you, you're going to look for these patterns only on the 15 minutes chart. Entries on everything on 15 minutes. You're not going to change your time frame for anything. Okay, just focus on the 15 minutes chart and that's it. Okay, entry on 15 minutes, liquidity pools 15 minutes, everything is on 15 minutes. Okay, so let's start from here. Okay, random charts. And let's start marking. The blue line you see here is 12 a.m. So between 12 and 8, 8 is right here. Okay. So between 12 and 8, you're going to mark our highest point and our lowest point. Okay, so this is our highest point. This is our lowest point. Okay. So as we can see, price rated the high. We didn't get market structure shifts, but we continue to break up aggressively, right? So you can see that we broke to the upside 2 more times, right? Here, and I'll see here. This is this. Well, with this aggressiveness, I will even enter from here. But I don't think I don't think it reached the fair value gap. It didn't give any entry there. So this would have been a continuation pattern. You can see that after the liquidity gap of the high, we didn't get immediate reaction or immediate break of structure to the downside, but price rather kept on aggressively breaking to the upside. So I would have entered continuation trade from here, from this fair value gap. But as you can see, price didn't come to the fair value gap and it continued up. But if you followed it, probably you could have had this trade from this other block for 1:2R, okay, or 1:1, or simply to target that high. So 1:2 would have been hit here, okay. So this would have been a continuation trade. You can see that we missed the entry here, but we could have had the entry here. You can see that after the liquidity gap, you kept on breaking to the upside aggressively. Like I said, in this case, you don't look for reversals, you look for continuation. Simple like that, right? Okay, let's look at the next day. 8 a.m. So between 8 and 12, we are marking our highest point and our lowest point. So this was our lowest point before 8, right? You can see that we rated it exactly at 8. And where was our highest point? Highest highs here. Highest point between this is the lowest point, is the highest point between 12 and 8. And you can see that if let me move this line. So lowest point immediately after 8, we rated the low at exactly at 8 and rated it one more time at 8:30, right? So that's good. We have our lowest point being rated. What we want to see is what? Market structure shift with displacement. So where do we see market structure shift with displacement or with a fair value gap? For me, this is where I see it. Aggressive market structure shift. Huge fair value gap left behind here. We have an order block, okay? So now you can take fair value gap entry or order block entry. We have another fair value gap here. So if you take the fair value gap here, your stop loss is here. If we take this fair value gap, stop loss is here. If we take the order block, stop loss is here. So if you don't want stop loss to be big, you can simply go with the last fair value gap here. But if you're going to use the last fair value gap all the time, you can at times just miss the entry, okay? And you can use the order block as well. Okay, so any of these entries are allowed, right? So we rated the low between 12 and 8, aggressive market structure shift displacement. This is what we want to be seeing, okay? Strong moves with displacement, right? And you want to enter from fair value gap here. You can also use this big gap up there. 50% of that gap can also be used. But still your stop loss is down here. Okay, that's the safest. You can use the order block here. You can also use the last fair value gap anywhere you're comfortable with. But just want you to know that if you're always going to use the last fair value gap, sometimes you can miss the entry. Okay, so anywhere that you'd have entered, you'd have still had your 1:1 or whatever target. Even if you enter from the first fair value gap, even from the opening price, and stop loss is here. Even with this bad entry, you would have still hit 1:1 and hit 1:1.5. Okay, you can also let the Fibonacci guide you. So between this low to this high, 50% of the range could have been the entry, so that your stop loss will be reduced a little bit. And this one would have given you times 1.8 risk to reward, right? Simple, you can also just go to the order block. The order block is valid because it has a fair value gap, okay? And as I said, you don't just trade from any order block, but you want to see trade from order blocks with fair value gap. So the order block would have given you a better risk to reward, right? But as I said, wherever you're taking the entry from, it doesn't matter. If you're taking 1:1 risk to reward, wherever you're taking the entry from, at least 1:1 will be hit. Easiest target. Almost all the time, you're going to hit this, okay? So this would have been a success, a nice trade for the day, and you are done, okay? You are done. So we rated the low, aggressive market structure shift here and then here, entry, and then boom, target is being hit. Let's look at the some more days. 8 is here. So let's mark our highs and lows. This is our highest point, and our lowest point is here. So you're going to wait for one side to be raided, right? So we raided the low. The low was raided. And as I said, as soon as we raid one side, we want to see aggressive reaction, right? If truly we are sweeping liquidity there and it is not a break of structure there and we are sweeping liquidity, we want to see it being followed with aggressive market structure shifts, okay? And then there you go with your market structure shift here. Okay, where do we have fair value gap? Here. So the order block with fair value gap is what is important. You can enter from the fair value gap, you can enter from the order block. Okay, that's fine. No fair value gap, no entry. If you have an order block but you don't have a fair value gap, just leave it. It's the fair value gap that's validating the order block. So that's your entry. 1:1 would have been hit within few minutes. You're targeting this high, then there you go, would have been hit as well. Beautiful trade. Okay. And as I said, you can target all the way to the buy side liquidity that's resting here. But normally I don't want to be greedy. This would have been crazy, almost times 5R. Okay. I don't want to be greedy. Normally I would take a partial at this high and I'll leave something small to run for the rest of the day to see if we can get here. That would have been 5R if we head through. Beautiful. That would have been 5R. So another beautiful win. Simple instructions that we are following. Okay. Highs and lows between 12 and 8. Wait for a raid. Win with. After the raid, we want to see aggressive reaction with market structure shift. You want to enter from a fair value gap or an order block with a fair value gap. As simple as that. Target can target 1:1, 1:2. Can target buy side liquidity for the morning. Can target intraday highs or the short-term highs. Or you can just simply target 1:1 with no problems at all. Okay. Let's continue. You can see that so far the backtesting has given us two wins. We have a win here, we have a win here. We also have a win here. Okay. From this order block here or mitigation block. Stop loss below this. So that was also a win for ×2. Now let's keep on backtesting. Some days you are going to lose, but as I said, you can turn a losing day to a successful day. Okay, you just have to think fast and know what price is doing. So here, 8. So between this time period, we mark the highs and we mark the low. Where was the lowest point? I think I'll use, should I use this? Yeah, there was, yeah. So that was the lowest point. Okay. Lowest point between 12 to 8. Highest point between 12 to 8. And lowest point between 12 to 8 is here. That was the lowest point. Okay. So we wait for one side to be raided. So which side was raided first? We raided the high first, right? Okay. We raided the high first. So that's where we concentrate on. So after the raid, we had a market structure shift here. Beautiful market structure shift, but we didn't get an entry. It didn't pull back. It didn't pull back to give us entry, and it went straight to sell side liquidity. That's crazy. If it gave us entry on a pullback, that would have been lovely to sell to our target, but it didn't give us entry from the fair value gap. It just went without it. So sometimes that will happen, but if we get this entry, it would have been very nice. So this is a day that we missed the trade, and it's fine. Okay, it's fine. You don't have to FOMO and rush. Just leave it to go. We missed the trade this particular day. Let's look for the next day. So with this strategy, you can backtest on one particular indice, okay, and then the one that you found consistency with, just trade that all the time. You can trade just one derivative instrument. You don't have to be trading everything. You can pick just one, either with 25, with 10, with 50. Backtest as much as you can all the way back, and know that this pair gives me consistency with this strategy, and I'm going to stick with this one all the time and just be following these instructions every day. If you lose, you can quickly reverse your idea, and then there you go. Okay, so let's look at this day 12 to 8. Our highest point is here. Our lowest point is our lowest point of the day was here. Okay, lowest point of the morning, highest point of the morning. We rated the low. We have market structure shift. We have the short-term high. Let me zoom it for you to see that there was a high here, short-term high, market structure shift right there. Okay. Though we went all the way below, but we didn't create structures below. So our idea is still valid. What I said for continuation is if after the raid and we still see two breaks to the downside, then we don't look for reversal, we look for continuation. But this one, it just broke, went all the way down, no structures. So our reversal idea is still valid. So we had our market structure shift of this short-term high here, and we only want to verify our market structure shift with displacement. And how do we know there is displacement? We know there is displacement if there is a fair value gap. So there is a fair value gap here, beautiful, right there. That's the only thing that can let us know that this market structure shift is strong enough. Okay. So if there is a fair value gap, then why not we can trade from the fair value gap for entry or from the order block here or here. And I like to use this. This has a lot of body. So I use that candle as my order block. So we could have entered here or here, either from the fair value gap, either from the order block, and then beautiful trade. So let's see. Our stop loss is below this low. Target 1:1 would always be hit within few minutes. If you are risking $10 for $10, within few minutes, your target is hit. Okay, but as I said, can target times 2, can target some fair value gaps or some short-term highs. So we have this high here, buy side liquidity, and that's the short-term high, right? That could have been a target. Easy. Profit has been hit up there. Okay, and you can leave something on all the way for the morning highs that you marked, but that would have been reached like the next day. That would have been reached the next day. But I don't have to be greedy. You don't need all of this because it's not always gonna get there. Target 1:1, 1:2, short-term highs, fair value gaps that were left behind, or could be a target. Other blocks here can be a target, or simply have a fixed target times 2 times 1, and there you go. Okay, another beautiful trade, another win. Let's look for 1 or 2 examples, and I'll be done with this video. The rest would be for you to what? Go into your chart and backtest as much as you can. Pick one derivative indices, backtest as much as you can. The one you find consistency with, stay with it. Okay, stay with it. So so far you see that we've not had a loss, or we are winning, following our strategy, our rules, right? Lowest point of the day, of the morning, highest point of the morning is here. We are waiting for one side to be rated, and we rated the buy side here. Took a long time for it to be rated, but we rated it. And do we have a market structure shift here? We didn't get any market structure shift. We didn't get any market structure shift. Even if it broke, there was no fair value gap, so no market structure shift here. So here we broke down, and it's aggressive enough because you have fair value gap here. Always look for the fair value gap before you think of order block, right? Fair value gap here. So now you can look for the order block above the fair value gap for entry. And there you go. stop loss above the highs. 1:1, easy target, always be hit as soon as possible. The target 1:2, it would have been given down here. Okay, beautiful win. Can see how aggressive the move was. Okay, we can go on and on and on and on and on with our back test, right? Let's check this last one. Okay, highest point is here. Lowest point is here. Okay, so we rated the low and we have market structure shift here. It is aggressive with displacement because we have a fair value gap here and also a fair value gap here. But you can see that this trade would have failed us. Okay, it would have been a loss buying from here. And this is where we turn our failure to what? To success. And I'll show you. This is where we turn our failure to success. Okay. So here, turn our failure to success. It's clear that this reversal pattern failed and we broke down one more time, giving us a continuation pattern, right? So this will be the raid now and then the break here. So now that we've broken here, immediately after the break, this was the order block here that was broken. So it becomes what? A breaker block. And as you can see, we traded into the breaker block with this candle, and that's your entry. Immediately on the breaker block is your entry. And stop loss is here. So this is where we turn our failure to success. You would have lost, but you would have won your money back. Easy, right? Simple rules. If the reversal pattern fails, reverse your idea and take continuation from the breaker or from the inversion fair value gap. So the inversion fair value gap was here, right? This fair value gap that we broke through it. Price didn't pull back to it, but if price came there, that could have been an entry point as well. Bullish fair value gap, we break below and break structure down. If we put back all the way here, that could have been an entry point. Or this breaker is also an entry point. Simple, right? And see how much profit you could have made. So I'll leave the rest to you guys. I don't know. I just don't feel like quitting the backtest because it's crazy. The range I'm seeing with the strategy here is just crazy, and I'm loving it. So here again, highest points, lowest point of the day. Let me use this because it's the only low I see within the range there. Okay. We took the highs first here. Do you have a market structure shift? Yes, we have a market structure shift here. Was it with displacement? No, it is not with displacement because we don't see any fair value gap here, right? So you don't take any entries yet. We wait to see what? Displacement. So now it plays around. Come and grab this high one more time. But with all of this, you are just waiting patiently to see displacement. And I mean a fair value gap. And here we break down one more time. You even broke here. Whichever one you want to use, you would have had an entry. We broke here, and now we see displacement. Fair value gap is here, right? So now we see displacement with fair value gap. Like this. You can take the fair value gap entry. You can also take the order block entry. And boom, beautiful trade. Beautiful trade from the order block, from the fair value gap, stop loss above the high. Aggressive movement. Profits banged. Simple, right? Easy. Simple rules, okay? No fair value gap, no trade. Someone will say, oh, I see this order block. Well, this order block is not valid to me. You don't have a fair value gap. So I'll wait to see another breakdown with a fair value gap, and now I'll look for entries. So I'll end this lesson here. Write down the instructions down. Write the instructions down. Make sure you follow them as it is. Don't change time frame. Only use the 15 minutes. For entry, for the liquidity marking, The time for the liquidity market is between 12 to 8. Your target, if you don't want to be greedy and you want to win all the time, just target 1:1. You can also target 1:1.5, 1:2. If you want to maximize your wins, you can as well target the lowest point or liquidity pools that gives you like 3R, like this low. This low are giving you like a lot of money. I don't think it was tapped. If you use the rejection level, then I think it was tapped. Okay. And that would have given you a lot of money as well. But it's not always going to give you this huge profit. But 1:1, 1:2 is a must. And as I said, short-term lows can be your profit target as well. Like this low, short-term low can be your profit target. Other blocks, fair value gaps can also be targets. Okay. So it's up to you to backtest. Just pick one and backtest. Pick one of these instruments, any of them that is your favorite. Backtest as much as you can. And the one that you found consistency with, just stay with it. Trade it every day. Trade every day using this strategy. Even if you lose, quickly reverse your idea and take it. And like I showed you, when to turn your failure to a success. Okay. And then when to look for continuation. Okay. If you read the high, like you see here, and price continues to break and not turn around, price continues to break and not turn around. After the second break, take fair value gap entry here for continuation. Simple as that. Okay, simple as that. So go and backtest and then let me know your success with this strategy. I would like to hear your comments and your feedbacks. Okay.